According to CNBC, the Tesla CEO stated in an email to employees that Tesla is cutting 7% of its full-time staff, stating Tesla will need to make these cuts while increasing the Model 3 production rate and making many manufacturing engineering improvements in the coming months.
The car market's huge, and this idea of an electric vehicle is now no longer new and sexy. So Elon's looking at all of his companies, because SpaceX layoffs are recent, and seeing where he can make cuts to make efficiencies. We've seen a lot of reports in the past that building his cheaper versions of the cars hasn't been easy. You know, there were all negative reports of workers, right? But he's learning the company overall is growing, and they just want to make more money for shareholders. Yeah. So
I know that you're a Tesla shareholder. I know you're big on the company, but in terms of seeing the reaction today, 10%, the decline in Tesla shares off this news, is this an overreaction to cost-cutting measures?
Oh, absolutely. I've never heard that being a profitable company and cutting costs to benefit the shareholders and create a product that's more attainable to more people as bad news. I mean, it's crazy that the narrative of the short sellers are pushing like this is some sort of problem when it's actually exactly what we want Elon to be doing, which is focusing on costs and keeping the company profitable and sustainable. What a lot of people missed in the letter was he said not only were they profitable in this last quarter, but they expect to eke out a profit in the first quarter as well. So, you know, here for all last year, everybody thought they were going to bankrupt. And now he's saying, oh, we're going to be profitable for as long as you can see into the future. And we're going to take the necessary steps to maintain profitability, as difficult as they are. This is exactly what we want to keep Tesla as a sustainable company.
You know, to be fair, though, when you looked at it, it was kind of a little bit of a doom and gloom note, at least from Elon Musk, at least just laying out, he said the road ahead is very difficult. But to your point, you look at the way analysts have reacted, similarly saying that this is a good thing, this is a positive, and then Morgan Stanley also pointing out that Tesla basically has no competition in the EV space, right, controlling about 90% of the market. But they do say that 2019 could mark the peak of that competitive advantage. I mean, looking forward, do you think Tesla might face more, competition in the EV space, obviously, as other automakers move in?
I mean, the way I look at Tesla is that every other car company has been dragged into the EV business, kicking and screaming because of Tesla. They just had the Detroit Auto Show, which was basically like an ode to Tesla's success, as every car maker is desperate now to try to compete, and most competition isn't coming online for years. And I still doubt any other car company's ability to scale the batteries that it's necessary to mass produce EVs to compete with Tesla. So at this point, we just don't see any competition for Tesla, and the brand has the kind of Apple-ish, cult status that so few companies actually have.
Sure, but I guess the last question real quick before we shift gears, I just want to ask you in terms of if they are, cutting their production workforce on this, a lot of the concerns have been about meeting their production goals. I mean, do you think that they actually can with now 7% of their workforce being cut? Real quick.
Oh, absolutely. Remember how this started a year ago? They wanted an all-robot factory, and that didn't work. So they went out and hired a ton of people to get production up, and I think he put in the note 30% increase in employment, and everybody then panned them and said, oh, see, they need the humans, oh, it's just like a regular factory. So now he's seeing all the efficiencies he can drive through automation, and what can he streamline, and you don't need as many humans, and that was always the goal of the Gigafactory and the production line. So I once again I'm dumbfounded at this being perceived as bad news. Now, the tone of the letter was serious, which was we have serious challenges that we face, especially with the phasing out of the EV tax credit, which is a shame because we really should be encouraging these vehicles. But it does make the car more expensive, so he's got to keep driving down costs to stay competitive. And
yeah, for sure.
That's the goal of the company.
And the tone of the email as well. When you're announcing layoffs, you're not going to be all kinds of cheery in that announcement. But also
First instinct was what?
This looks to us like a mix of a proactive move in terms of cutting costs to get ready for later this year, but also a bit of cleanup on the kind of massive push to get the Model 3 out this year. I think they added an awful lot of staff to get these numbers and extra resource, with like the tent that they'd put up to move cars through. And so to see them cutting the staff isn't a huge surprise in our view.
This is a full-time workforce. These aren't temps, though, right?
Yeah, they're not temps, and they go through an ongoing evaluation of their team on an annual basis, is our understanding. And so it's not a huge surprise to see this. You never want to see a growth company cutting staff like this, but we're not overly concerned. What we think is the real point of debate for investors right now is whether the company's going to be able to sell 250,000 of these cars, of the Model 3s every year, or something more like 400 to 500,000. And I think they're being proactive here to get towards that 400 to 500,000 number.
You still think this stock is going to be worth $418 by 12 months from now, right?
Yeah, actually, we do. There's a couple things going on that we're bullish on. One, we think they cleared out a fair amount of inventory in the fourth quarter, so the cash flow number we think can surprise to the upside still, even with a slightly lower than expected EPS number. The other thing that we think they're going to end up doing is actually begin ramping this factory in China. We think people are going to get bullish on that. And then showing the ongoing sales numbers, especially in the back half of this year, is going to be a key driver for us in terms of the bull case.
How much do you care about this debt payment that's going to come due next month, and
it looks to us like they've got plenty.
To be.
We think they've got enough cash on the balance sheet to actually do that without having to convert that stock. We think it's a catalyst if they can keep the stock up above 360 to get that converted into equity. But it's not.
My question is, do you think it's going to be there in a month? I mean, it's
a little bit hard with this market. It really depends on where the cash flow number comes out, and we think street expectations have been creeping a little bit higher. That's a little bit what you're seeing in the stock reaction today, that people are recalibrating.
And then part of it sounds like you're making a bullish case on where vehicle sales are going to be in the second half of the year. But in the second half of the year, you're going to have a number of real competitors coming online with some of their vehicles. How do you think about that?
Well, let's just get realistic about what that competition looks like. I mean, people have been very excited about some of the vehicles coming out in 2018. That's been, one, those cars have been delayed. Two, the products haven't been as exciting as people anticipated. We were just at the Detroit Auto Show this week, and we saw, around 10 EVs on the show floor, and none of them were particularly exciting. There's only one, the Hyundai offering, that even remotely comes into a consideration in terms of competition, and it wasn't that exciting a car. It's in the right price range, but it's still just beginning production, potentially available as early as February, but it's a little unclear. Right. So if you think about what the real competitive environment looks like, and the operating system that Tesla has brought out, where they can actually update the vehicle with an integrated, kind of software-defined architecture, we're not going to see those cars for another 2 years.
How much does it matter, and when do you think the Model 3 will be available at the $35,000 price point that was the original plan?
This timing has been slipping. We would look at somewhere around late 3Q, 4Q. They're going to probably push to get it out for that July 1 date, and we'll see what happens.
Well, the Model 3 has just posted historic numbers. But let's take a step back for a minute. What most consumers don't realize is that every automaker in virtually every country in the world is moving all electric, and Tesla's, frankly, in the pole position. They're winning. The challenge now is, after they have really won the high-end market in the U.S., is how quickly can they go international. And I think they're very well positioned to do that, already moving forward with a plant in China. And how quickly can they get to that mass market $35,000 vehicle with a 200 or 250 mile range? I think Tesla's going to win that race. Mr. Musk surprised Wall Street by posting a profitable quarter in Q3. I think he wants to do that in the future while he takes costs down. He's doing a little bit of right sizing, but the fact is he's moving faster than anybody else. He's going global faster than anybody else. And today, Tesla is essentially the iPhone of the electric car market. I think he's going to end up looking smart. There are three things I think he left out. First, Mr. Musk did something that's very smart. He brought battery production in-house that gives him an enormous cost advantage over competition. Two, each quarter, Tesla has taken the cost of lithium-ion batteries down. That is what enables them to bring lower-cost cars into the market. Three, they're showing efficiencies in production that no one anticipated in Q3. I believe they're going to continue that. The simple fact is Tesla's just moving a little faster than the others. Other major companies like Audi are moving very quickly to catch up. But most people, as Warren Buffett would say, were caught with their shorts down when the tide went out. Tesla's clearly in the pole position. I think the bigger challenge, longer term, will be the Chinese. But today, if you look at Q3 numbers and Q4 numbers, Tesla's Model 3 is the #1 selling auto unit in the country by dollar volume. I think they're going to continue that. I don't think so. I think the headlines are this. He shocked the market by getting to profitability in Q3. He wants to continue to do that while taking the price of the vehicle down. I think that's a smart thing. It's going to require some right sizing. I suspect once he's done that, and if he posts anything close to a profitable quarter in Q4, they may take on additional debt to continue their global expansion. Again, they've essentially won the North American premium market race. The challenge now is to win the mass market and to go international. I think he's preparing the company to do that, and I wouldn't bet against him.
Tesla early this morning said it will cut its full-time workforce by about 7% while it ramps up production of its Model 3 sedan. So we have layoffs coming to Tesla, and Tesla stock dropped 6% in pre-market. What is Tesla doing right now? It is down 8%. Woo! So the damage here as a result of that news. And joining us to talk about it is our car guy, Rick Newman. Hey, Rick.
Hey, guys.
So is this a shock? Is this something that people knew was coming, predicted? How bad is this news?
Well, when you see the stock drop by that much, that means people did not see this coming. Normally, when a company says it's laying people off, that means labor costs are lower, and Wall Street tends to like that because that boosts the bottom line. Yeah. In this case, however, Wall Street is interpreting this as signs of a problem at Tesla. I think they're reading, investors are reading into this that maybe there's less likelihood of profitability in 2019. And Tesla is just having a very rough go trying to get up to what is essentially a smooth manufacturing glide path. I mean, Tesla is a binary company, unlike most other companies. Either you love it or you hate it, right. and you're either intensely long because you think it's going to change the planet, or you're intensely short because you think it's a bunch of flim-flam. So what's going on here with the Model 3? It's really just about numbers. Mm-hmm. This is supposed to be a $35,000 car that would sort of sit at the top of what you might call the middle market. So, you know, that's where where you can get mass market volume. But it's not. The cheapest one right now is $44,000, and they introduced it well above $50,000. So the higher the cost, the fewer people that are going to buy it. And in order to get the volume where they need it for profitability, they need to get the cost down to $35,000, and that's why they have laid off these workers. It's good that they're finding ways to address costs. I mean, that referral program, no other automaker really offers anything like that, where if you own a car, you get these goodies that you can give to your friends. I mean, they don't need to offer that. I mean, if your product is good, you don't need to entice people with gimmicky things like that. And people do love the product. So it's fine that they're getting rid of that. But they just, the real question here is, will they be able to build this car with fewer people? I mean, will they be able to make this sort of manufacturing improvements while keeping the quality up or pushing it even higher to get pump the cars out in the volumes they need?